Okay, but we have a very important discussion lined up, and joining us for that is a very special guest, Gautam Duggad, Head Research Institutional Equities at Motilal Oswal Financial Services. Good morning, Gautam. The reason for inviting you is that you have one of the most bullish earnings expectations on the street. I think for the year after, your Nifty expectations were 686 rupees. When we last spoke, I don't remember. But now with this second wave of COVID, do you think that you have had to have a downward bias on any of the earnings for Q4 or for next year?
Hi, Lata. Good morning. Just let me correct you. We have an estimate of 718 rupees for FY22, and most likely we will end FY21 with around 540 rupees.
Oh.
So that will be a growth of 30% or thereabouts. Yes, the recent news flow around COVID is not very comforting. More importantly, the crude oil price and some of the other commodities which have had a inflationary run in the last 2 or 3 months, that is also slightly unnerving from a short-term margin perspective. But so far, there is nothing which warrants any sort of a panic on earnings estimates. We've not seen any major cuts. We are still in the process of finalizing our fourth quarter estimates. But from whatever I have seen so far, there is not much change that I have seen. Clearly, one needs to wait and watch how earnings season for 4Q pan out and how companies, take care of the inflationary trends in their commodity prices. But yeah, I mean, unlike a year back when we were seeing earnings cut left, right, center, we have not seen any sort of panic. Plus, even if you look at COVID in totality, ex of Maharashtra, rest of the country seems to be doing fine. And we just concluded our 3 days ideation conference where 60 mid-cap companies presented over the last 3 days. Even from corporates, we've not yet heard any sort of worries or panic so far.
No, Gautam, it's not just Maharashtra. There were night curfews imposed in several cities outside as well. So, I mean, there were night curfews, obviously not impacting business. But, last time around as well, the surge started in Europe, came to Kerala, then Maharashtra, then the rest of the country. We hope it doesn't go that way this time and peaks off here. But the other factor you touched on, the higher commodity prices, and some of the manufacturing companies we spoke with are worried about it getting into their EBITDA and margins as well, because the commodity prices have been unusually high and they have not been able to pass it on entirely. So both EBITDA and margins are expected to be hit. Therefore, will there be any trimming of earnings?
I think, Lata, when you look at Nifty earnings, when you look at it from a top-down context, there are two counterbalancing forces that are prevailing there. There are consumers of commodities and then there are producers of commodities. While one set of the companies will have an impact on their margins because of the higher cost, the other set of companies may benefit because of the higher commodity prices. Companies belonging to metals and oil and gas domain, they may have an upward revision in earnings. Our analysts just for the third time in a row revised earnings of metal companies upward just a week back. As far as banking and financials, which is I think 40% of the index and almost 30% of the Nifty earnings, they don't directly get impacted by rising commodity cost. So yes, there are sectors like auto, consumer staple, consumer durable, to an extent cement, which may see some trimming of margins here and there. But I don't think Nifty per se will have very significant impact because of commodity cost. And also the sectors and companies which are going to see impact, some of them have already passed on the inflation to the customers through various rounds of price hikes. Consumer durable companies have already taken 2 rounds of price hikes. Auto companies have already taken some amount of price hikes. So yes, there will definitely be some impact. Outside of Nifty, it can be slightly more exaggerated. But within Nifty, I don't expect any significant impact just because of commodity prices.
Okay, Gautam, hi, good morning. I know we called you to talk about the impact that COVID would have on these businesses, but I'll come to that in a bit, because what's also topical today is the new listing from Lakshmi Organics. And of course, it was yesterday's listing, but it's doing very well today. And this whole specialty intermediate space in the agrochemical and pharma business has been doing really well, whether it's something like an Aarti Industries, Naveen Fluorine, now the new listing Lakshmi Organics. From this entire bunch, for a long-term investor, where do you still see a potential, if at all?
This is a space which has been very positive for last 3 or 4 years. This is a bunch of top-down and bottoms-up factors. We all know issues in China over the last 2-3 years. Now there's whole trend about China plus one, and in general, the penetration and consumption of some of these commodities or elements have gone up. And we have seen significant earnings growth in this space over the last 3 or 4 years. Companies have become multi-baggers. There are a bunch of companies belonging to that space, SRF, PI, Aarti, the other names that you just mentioned. As of now, we cover just SRF and PI industries in that space. And both of us are still looking quite good from a next 3 or 4 years point of view. Their ROEs have gone up. They have invested in their capacities. Their demand continues to remain quite strong. So this space, as long as earnings are continuing to grow at a healthy pace, and at the same time ROE accretion continues, I don't see too much of worries out there. So yes, I mean, it's quite natural that the interest in that space will remain quite high, and new companies will come and get listed.
Okay, all right. Gautam, hi, and season's greetings to you. Wish you a happy Holi in advance. I know for us people in Mumbai, there's hardly any Holi, right? We'll just sit at home and perhaps watch a bit of the OTTs. But, tell us, since you're overall still optimistic and you're not willing to sort of start, wielding your pen or pencil on the cuts right now, let me ask you this. Where do you see the greatest outperformance? And maybe not just Q1, but beyond, because Q1 will be complete aberration because of the shutdowns last year, etc. So which is the sector that can show the best, let's say, earnings performance or recovery?
I wanted to add to that so that, you can handle both. Because of commodities or COVID or whatever, where are you having a positive bias on earnings, and where is a negative incremental bias? Where may the cuts come?
So let me handle the second question first. So where I see incremental earnings downgrades that can stem from is in auto and consumer durables, because that is where the impact of commodity cost seems to be the highest, and price cuts so far are not adequate to pass on the entire impact. Where I see positive impact is quite obvious. Metals is one sector where the impact is going to be massively positive. If I punch in the spot prices in my metal companies models, the target price offers, very different kind of upside sensitivities. To answer Surbhi's question, Surbhi, there are three sectors where we are expecting significant earnings growth. One is obviously BFSI, which is banking and financials. Incidentally, amidst all the noise of COVID, one thing that we've forgotten is the banking and financial services earnings, as far as Nifty's 10 stocks are concerned, they bottomed out in FY18 or 19, around 60,000 crores. And from there, in FY21, they are going to end at 1.2 lakh crores. For FY22, our expectation is 1.6 lakh crores. So clearly, very strong earnings momentum continuing over there. Commentaries have been positive. Whether it was the third quarter, whether it is a collection efficiency, all sort of things. The other sector which is going to lead forward is the cement. It's a very small sector right now, just 2% of the index, but they are seeing massive momentum both from demand. There is, of course, some bit of inflationary pressures which have come in, which may get passed on or get adjusted given the operating leverage of higher volume growth. And then you have sectors like metals, IT, which are continuing to post very strong set of numbers. So it's a very confluence of some positive factors and sectoral nuances which saw us through in FY21. Who would have imagined a year back that we will end FY21 with a 15% earnings growth? We were all wondering whether FY20 earnings will come back in FY22 or not. And here we are seeing a 15% growth in FY21 itself. And so those are 3 or 4 sectors that we are seeing good earnings.
Got that. And expecting a 30% next year, as you say. Well, Gautam, you've lifted our spirits. Thank you very much. At the moment, not to worry about earnings trimmings, because a lockdown or loss of business perhaps would be very, very localized. Thank you very much for joining us. You may want to stay on for the next conversation, because it's a very